Okay, well, welcome everyone to today's webinar on the 2023 Modernizing AR Processing Survey. This is Brian from Strategic Treasurer, and we're pleased you could join us as we discuss the survey results and discuss the implications for organizations in 2023 and beyond. Our speakers for today are Anthony Mignogna, Vice President of Strategic Solutions Engineering at Corcentric, and Craig Jeffery, Founder and Managing Partner of Strategic Treasurer. Welcome, Anthony and Craig, and I'll now turn the presentation over to you.
Thanks so much, Brian. And Anthony, it's good to present with you on this research that we did together. Thanks so much for joining.
Yeah, likewise. Appreciate it.
We have a great appreciation for everybody who took the survey. So if you're here listening to the results and you took the survey, you have a double portion of thanks from both of our companies. Your time spent responding to a survey helps you individually and also gives you more data and detail. So you help the industry, and that is greatly appreciated. I am also looking forward to some of the polls that we do on a question about survey results or on a webinar about survey results. Asking poll questions seems doubly data specific. Let's go through our agenda. We have a few things we're going to cover today, and you can see some of the containers shown on the screen. We'll cover some information about the survey. Over 200 people took the survey, ran for about 5 weeks, had over 50 questions, pretty significant piece of work. And we'll go into some of the details about that to start off our discussion. Then we move over to inbound payments, and a lot of the learning here is there's more payment types that are coming in. There's increasing complexity in many companies. Very few companies have one payment channel, one payment type, one bank, one account. More and more companies are experiencing high complexity or hyper complexity, and that colors a lot of the discussion when we think about modernizing accounts receivable. There's more moving parts. How do we do that? So we'll look at some of the data and what some of your peers are doing. Then we'll move on to visibility, this desire for real-time, desire for more information, and how this is changing over time. This is not just impacting AR, it impacts AP, treasury, finance. Pretty much our entire lives are focused on more visibility, better visibility, the power of data in a very timely fashion. Maybe not instantaneous, but in a timely fashion. And then fraud raises its ugly head again. There are losses, there's concerns. We'll touch on a few of those areas. It's significant. You'll see some of the numbers and find that interesting and compelling for how we respond and prep ourselves. On the pain points, there's a few areas that we're going to highlight today. There's obviously more than we'll be able to get to in today's webinar, but forecasting continues to grow in importance and in the size of pain that it's causing. And if you look over a multi-year trend for this research, you'll see how that's happening. But there's a couple other areas as well, from staff on collections to reporting and visibility. Those things are changing in importance to your peers and probably to you. And then on the key takeaways, we're looking at some advice to leave with you as a result of this information from the research, as well as from what Anthony and I and our companies know about the business. So how do we deal with and how do we think about increasing channel complexity? What needs to be examined most closely? Ways to deal with fraud, and then this idea of visibility and viewpoint. So that's our list. We've got 55 minutes to get through it, maybe 54. I'm really interested in doing that. I'll cover the results. I gave you some heads up on the quick stats. Well over 200 of you took it across all kinds of domains. You can see annual revenue size. It tends to be a little bit more heavily biased in the 1 to 10 billion annual turnover revenue. Pretty even across the way we have the groups broken out, but certainly quite a bit of information that's useful. Extremely heavy participation North America, Europe, and Asia Pacific strong as well. Lighter in player in Africa, Middle East, and decent representation in Latin and South America in terms of where companies operate. So that's the quick and dirty on the survey results. Brian mentioned that you can download the report. That information will be shared in both the chat box and at the end of the webinar. I encourage you to click, download it. Feel free to share the link with others to download that. So onto the complexity. Here's a chart that shows how many banks do organizations have to receive payments. I'll do this as a setup for Anthony. So just to explain it, you can see one across the y-axis across the bottom, 1 to 21 plus, or I don't know. So Anthony, it's a huge percentage that use more than one bank, and sometimes even using more than 5 or 10 banks. Here, this is a complex environment that more and more organizations are seeing some challenges with.
Yeah, I mean, there's an equivalent number using more than 5 than as those using 1, right? And it's a testament to the I think one of the common themes that we're seeing is this increasing complexity in B2B commerce. Because for every receivable, there's a payable on the other side, right? And ultimately, how do you kind of structure your billing to so that when you get those receipts in, you can route them appropriately to the right accounts. Kind of doing it right the first time, right? But then also planning for the inevitable misallocation that you might need to shift across accounts or across banks.
Yeah, so the note at the bottom there too, it says 78% of large companies use more than one bank. Just as a placeholder for everybody who's looking at the top chart, where the green bars are, that's the broad full population. But if we break down companies between large and small, and you can see in the report where the cutoff is, it's an even larger percentage use more than one bank, which is not particularly surprising. But because we ask so many people, there's good ways of cutting the data.
Yeah, and everybody's trying to grow, right? And as you grow, complexity is inevitable, right? It's going to kind of grow with it, and so it's something that you got to plan for, as you scale.
Yeah, excellent. Thanks, Anthony. And so this next set of data, this next chart talks about inbound payment channels. We left off some of the more manual methods that are more common in the U.S. and less common in other countries. So we focused more on the electronic or digital methods. From the top to the bottom, you can see that the green is planned to add in the next year, and blue is current use. So some things like real-time gross settlements, like wire transfers at the top, a very, very small percentage plan to add. Almost all use that as a method of receiving payments. And then you go down all the way to Zelle at the bottom, which historically has more been consumer to consumer, but also making its way into the receivable space from 3% to another 7% expected within the next year, bringing that to 10. Anthony, I'll let you dig into this for the group.
Well, I mean, I think it kind of ties to the previous slide as far as the complexity, right? How the money's coming in and where it's going. I think it's worthwhile for organizations to be flexible in the payment methods that they accept. I think it gives you a better chance of getting paid, on time by your customers. So you want to have that flexibility to kind of meet your customers where they are, but also, be able to move customers to your preferred channels when that's applicable. Understanding that your customers are at different points of adoption on some of these as well, right? So you mentioned, in North America, there's still lots of organizations that are paying and getting paid by paper checks. Ideally, you want to move those to electronic from a receivable standpoint. But you got to have that flexibility so you can ultimately get paid by your customers.
Yeah, it seems like most companies offer, more or all of the above to receive payments. And sometimes that's restricted in different areas.
Mhm.
So Anthony, I would like to ask you to look at the chat box. There's a section about downloading the survey report. Brian has posted. There's a shortened bit. You can click on that, enter your information on the Strategic Treasurer website for that survey report, fill in the information, and then I'm not sure how quickly you get the report. You get it pretty quickly. That would be great to go ahead and do that while we're in the webinar. We've got some more actions for you as well. So webinars is not just eating popcorn, but listening and clicking. I guess we're adding some responsibility. So thank you for being a great audience and putting up with that. So our first poll question, if you don't see it, you can see the chat box, how to find it, but Alt-Tab sometimes can bring the poll question to the front, or look on your second or third or fourth screen to see where that may have popped up. But the first question is about visibility. Which of the following reports would you like same day or real-time visibility to? This is multiple choice, so you can select as many as are applicable. It starts with payment channels, goes to the cash flow forecast or cash flow calendar, reason codes for unapplied payments, all the way down to rejected or other. And we're assuming that there's none, that there's nobody who would say none. Which ones would you like, same day or real time? So, fairly current visibility. Go ahead and select any of the ones that apply, and then hit submit. And when you're done with that, also in the chat box, you can follow Corcentric on LinkedIn and Strategic Treasurer by clicking that. The link, if you have LinkedIn up, you can go ahead and follow the companies and stay current with some of our chat and chatter. That would be excellent as well. So I think people are still filling out the poll. If you want to see the results of all the poll questions in the report, they'll appear on these pages where there's polled. Either type the word poll or Corcentric. Corcentric would be the advanced person typing that, just as a reminder, who underwrote the survey. So Corcentric or poll. If we get 100, we'll send it out to everybody. So yeah, please feel free to drop that in. Anthony, we just got a ton of information back on the poll question. It seems like number one is the cash flow forecast. That will be talked about later because that's very consistent. Unapplied payments and rejected disputed invoices are pretty high there. I don't know if you wanted to comment on that or anything else. You've got a freestyle option to comment on these.
Yeah, I mean, never have I ever heard I want less visibility, right? So, but I think there's some clear trends here, right? The unapplied payments, the forecast calendar, rejected, disputed, all kind of point to that predictability, right, and visibility element of receivables. That's quite frankly always a challenge, right? In particular, forecasting sometimes a little bit more of an art than a science, right? Depending on how reliable your customers are paying on time, right? Due dates versus their check runs and those types of things. But yeah, pretty interesting. I think the other one on the other side that's pretty low is the team productivity, right? So it seems like that's maybe less of a priority, but also, in a way you could look at team productivity as an output of, processing these things. It's a little bit of a different data set, probably harder to get to.
Yeah, I liked your comment about never have I ever seen anybody want less visibility. It reminds me of the other side, never have I ever wanted slower data, never have I ever wanted slower payments. It doesn't mean that I always want 100% visibility to everything that exists, right? That could be overload. Same thing with speed. So I'm going to steal that never have I ever in the future. And I'm just saying that publicly. So, I'll try to attribute it to you, but I might not be able to say your last name very well.
That's all right.
But
no pride of authorship here.
All right. Thanks, Anthony. So that finished our first poll question. Thank you so much for taking that. And the best part is that Brian has to count up all the Corcentrics and polls to see if we hit the number, and I can stop banging everybody on that. So real-time visibility, that was one of the first ones. We got the 2-year look back here. Blue is 2022. Is that like an orange color for 2023? You can see, I'll let you comment on this, Anthony. So payment channels bumped up 6 points. Cash flow forecast jumped up 7 points, pretty notably. Unapplied payments, still significant, but consistent. Reason codes for unapplied payments, that's a 12-point jump. That's the most significant. So this tells us a little bit about the details about what type of real-time or really current visibility matters, Anthony. Any thoughts here?
Yeah, I mean, we're seeing forecasts. I think it's kind of always important, but it's growing, from a priority standpoint because of the increasing cost of capital, right? And, supply chains and those types of things getting a bit stretched. The reason codes one was interesting, because I think like first step one, get visibility to unapplied payments, right? But then next question is why is it unapplied and where does it go? Because unapplied payments get harder to apply as time goes on, right? So the ability to apply those quickly and efficiently and accurately becomes more important, right? And I think that's kind of what we're seeing here.
Yeah, and just a note too, on the bottom of the screen, you can see not all answer choices are displayed. So there is a method to our approach of those that take the survey get a lot more details than those who don't take the survey. We still provide a general report, which is quite useful, but those who take it get some additional detail. So that's meant to be an incentive for people to take it. And invest some of the time, and it pays off in a couple different ways, including additional info. So our next poll question shows up. This is inbound payment security has become what? Significantly more important, about the same, less important, significantly less important. And we didn't give you an option for I don't know. So you got to force a decision of which one is the most appropriate for your organization. We'll look back over 2 years. Has inbound payment security become more important or less? And go ahead and plug that in. So I'm told by Brian that we still need half of the number, still need 50 Corcentrics or polls typed in the chat box. So I would love it if you guys could. I won't have to say anything more. It just goes all the way. So thank you. Makes me happy in my heart.
I bet you I could guess which one of these is going to be the highest. Probably.
Well,
at least
one
of the
yeah.
top two.
Write it down on a piece of paper and be ready to say it, but let's not bias everybody towards
sorry. Yeah.
Making Anthony happy.
Poison the well.
I think I probably think the same as you on this one, but we'll give everybody a moment. All right. Is this what you were expecting?
I definitely expected the top ones to be the most popular. I thought that we would see like one long bar in either more important or significantly more important. So the fact that there's a bit of a spread between the top three is a little surprising, but
yeah, and in a lot of the webinars we do when we ask this type of question, it's very heavily skewed towards the more important and significantly more important. It's usually less, not just by 3 points, about the same. And then this 3% or less view it as less important. Sometimes it's zero, even with hundreds of people responding. Sometimes it's zero.
yeah.
So when you look at the skew, it's like it's very much between more important and significantly more important, because we've got 75% there and just 23% on about the same. So our purpose in asking this is just to see where the audience is and to amplify what we're looking at. So yeah, thanks for your comments, Anthony. What's the poll show us? I'll set it up, Anthony. I know you've got a number of things to say on fraud. Just a couple items. The left side is payment redirection, and it's 25%. I think it's 24.5. We rounded it. suffered a loss or inconvenience due to redirected payments. So a quarter of the population experienced that, an actual loss or an inconvenience. And then the payment security concerns, 70% identified it as more important or significantly more important to 2 years ago. So our poll today on those who are sitting on the webinar, that was 75%, so fairly close. And in the survey, nobody indicated a decrease in importance. So that was 0%, compared to the 3%, a combination of 1% and 2%. So pretty close to the survey results. Anthony, any additional color you want to provide here and how people are looking at fraud?
Yeah, I mean, I think it's getting more important because it's becoming more prevalent, right? As we move to a variety of payment channels, there's a variety of angles for fraudsters, right, as they say. And we're seeing it, in the conversations that we're having with finance professionals, climbing the ranks of priority as it relates to decision criteria for AR solutions, right? Whereas historically might have been like part of it. Now it's a main part of that decision process, and obviously moving towards electronic payment methods is one way to increase security, and really it's we have AP and AR conversations, and it's a conversation on both sides, right? So the people that are paying you are investing in fraud prevention, and as are those that are receiving payments. And so this is a really good opportunity to really partner with your customers through ensuring that payment instructions are decoupled from the actual invoice, and that there's security on both sides of it, so that redirected payments risk is mitigated as much as possible.
Yeah, fair points. The next one is the next question, and the slide that we're looking at is about scaling order to collect. What activities require attention to allow an organization to handle increased volumes or increased scale. The three areas, these are extremely close, right? There's you can look at all the different results, but the variation is between 46 and 48%. So just about half of all companies say, here are some of the gating items, right? So a little bit, just over half don't see these as gating items or issues that have to be resolved. So it's about 50-50 here. From cash application, collection, and reconciliation. Anthony, you're in this area a lot. I don't know if there's an additional guidance and description of why this is likely the case, what people are doing about it.
Yeah, I mean, I think in organizations that are, high growth, this can be a bit of a barrier. A lot of times, especially in more manual environments, right? We'll talk about kind of efficiencies and those types of things later, right? But your back office kind of has to scale with the growth of the rest of your organization. And there's some things that companies can do, right? I would, investing in solutions that can help make cash application more efficient is going to help the reconciliation on the back end. Helping drive more automation and visibility. It's going to help drive more efficiencies in collections so that the AR personnel doesn't have to directly increase with your revenue growth. And you can look at other solutions that can help kind of bring those things in line as well. But this is a common, visibility, scalability, and predictability are probably the top three conversations that we're having as it relates to receivables, because of that issue, especially in high growth industries and high growth organizations.
This next result, we're showing a 3-year, 3-year span of what's happening. When we look at data and research, getting 1 year's worth of data is kind of like, that's interesting. But when you can factor that in some areas, when you look and you see, here's a trend over time that can inform us, help us do things differently. And so this, this arc of time, longitudinally, as they say in statistics, right? 50%, 40%, 6%, 29%. So this is about receiving and posting payments. Are using bank provider receivable systems for posting payments. There's a range of items that could be interpreted in that, but I mean, what we're seeing is a decline here. This is certainly an ongoing trend. And Anthony, what are people thinking about and doing? Are banks exiting the business? Or I know lockboxes are closing down, and that's becoming, certainly for paper-based items, that's becoming less important to many. Your thoughts here?
Yeah, I mean, I think this kind of coincides with the emergence of more, I think the industry term would be fintech solutions, right? And as those solutions get better and better, banks kind of go back towards focusing on their core competency, which is banking, not software, right? And I think organizations, are now investing in fintech solutions to support their receivables. I think the AR side of that is, catching up to the AP side from a technology standpoint. And as such, the leveraging the bank's systems to do that is becoming less popular.
Anthony, just a good question on that. Is that, generally it seems to me, this is not survey data, that banks and fintechs are partnering more, and that partnership is perhaps more apparent now. It used to be banks always wanted to white label everything, and now it's not. That's not viewed negatively. It's oftentimes viewed positively in some ways, like the banks are partnering with the right fintechs, and that's more apparent to the market. How much of this is that the general change in who's doing it, and how much of this is just maybe more transparency to the ecosystem that the banks are plugging into?
Yeah, I think that's a good observation. Right, where historically the white labeling was probably more prevalent because it was an asset to have that underneath your brand, whereas now partnering with the right fintech is an asset from a brand standpoint, right? As those solutions have improved. So I think that's accurate.
Yeah. Excellent. So we had a question come in on the fraud concerns. I want to pop up the next poll question to let people answer that. There was a question about how much do fraud concerns vary between outgoing as opposed to incoming payments. So how concerned is, let's say, the AR side about fraud versus the outgoing side? So I don't remember all of the statistics, but concerns about fraud on the AP side is certainly higher than the 25%, those who've suffered losses. So it seems to be a little bit higher on that side, but that might be a good thing for us to put an article out about outgoing and incoming fraud concerns, see where the difference is. But the biggest area where there's losses is on the AP side. That's number one. AR is an area that's been pretty ripe and hammered heavily as well. So yeah, everyone's feeling pain, but I think a little bit more pain on the outbound side. But the criminals are getting pretty good at hitting every area if you're not watching it. So the poll question, Anthony and I are asking you to respond to up to 3 pain points. We're not monitoring if you hit 4. We can't stop you from doing that. We won't even be mad at you. But what task is the largest pain point in your AR process? We've got forecasting all the way down to other. So what are when you look at those, and if you're in the AR area, what are your biggest pain points? If you deal with the AR group, maybe you're in treasury or maybe you're in AP, identify what you think is the best result there and go ahead and hit submit. While you're doing that, I think Brian's going to pop up another link for somebody to follow in the chat box, because we can, I don't know, maybe we've hit our number. Yeah, so the following Corcentric and strategic treasure, that would be awesome. I'll ask Brian to also put up CTM file, which is our treasury media site that covers the cash conversion cycle. We would absolutely love it if more people would follow that. We took it over a couple of years. It's growing nicely. Love people to look at it. And also informed by Brian that we need about 18 more Corcentrics or pull in the chat box. All right. A lot of chatter there. Thanks for following CTM file, Corcentric, and Strategic Treasure. He'll pop that up in the chat box. You know, you doing it while it's there is quite pleasing and helpful to us. Our marketing team loves that. Marketing group's happy. Pain points, Anthony. This almost looks like we listed the pain points in order of the results with a few switch outs there. The accessing customer portals should go a little bit lower, but for the most part, it runs from the top to the bottom. Forecasting is a key issue here. Yeah, describe how you react to this information and what this might mean.
Yeah, I mean it's pretty even spread there at the top, and it kind of aligns with some of the survey results that we've talked about, right? Forecasting, visibility, dealing with complexity, staff intensive. We touched on that related to scalability. I think those are kind of two sides of the same coin, and I think probably more so last year when there was a lot of turnover, right? Those become shocks to the system a bit, right? So the more staff intensive work you have, the more effects you have from turnover in your AR department. Accessing customer portals, is a conversation we have quite a bit, right? But it's a little bit, of a self-fulfilling prophecy, right? Because if somebody's calling me about it, obviously that's their biggest pain point. But the ones that don't think it's a pain point aren't calling me about it. So, I think that's probably the starkest, gap, right? Is that one's pretty low. But yeah, I mean, complexity and visibility and predictability are kind of front and center on this one.
The accessing customer portals, just as we've done surveys multiple years and seen is accessing customer portals seem to be at least my memory seems to be informing me that was a bigger issue some years back, where it's like every payable system has you go into their portal, and you're like, I'm receiving stuff. Why do I have to go into all these different portals? That seems to have been moderated a bit over the past few years. Is that what you generally see too? I mean, 13% isn't a huge number, but it was a real significant pain point not too long ago.
Yeah, and I think this ties to that what we were talking about before, right? Usually when there's an efficiency problem that can be solved by technology, it corrects pretty quickly, right? Because the fintech industry has matured extremely rapidly, and so building those connectors I think has largely happened over the last couple of years, and organizations have invested in those solutions. So I would say that's probably where we've seen that decrease.
All right, so I think we're pretty close to the total Corcentrics or polls there. We're within just a few, so I know we'll go over. So feel free to download the survey report. We're going to jump back into a detailed chart here. So what are we seeing here? These are some of the same questions we asked in the poll. This was from the survey. We asked people to select the top three. And so you're selecting from among a number. I don't know if the numbers are exactly the same in our poll as they were in the survey. But Anthony, if we look across the orange color, forecasting in our poll here was 52%. It was 31% for staff intensive work around collections, and for reporting visibility it was 43%. So quite a bit higher numbers here. So if I'm adding up the numbers in my head from before, I think people are answering more than three. And if they answer more than three, there is a little bit of a shift because collection work and visibility were almost the same, 26 and 29% here from the survey. The poll, though, showed reporting and visibility notably more important by 12 points when people were freed up from the top three. As you look at these, you can talk about any area or all areas. Why is forecasting so important? What's going on with collection work? Go for it.
Yeah, I mean, the interesting part about this graphic is kind of the trend lines, right? So, forecasting, I kind of touched on this earlier, from a macroeconomic standpoint, capital is becoming more expensive, capital is becoming less available. And so it's becoming more important and it's probably becoming harder to collect. So that 3x jump in forecasting, I think, is kind of a sign of the times. The reduction in staff intensive work, I would tie to what we saw during the pandemic was a significant investment in technology automation solutions, right, to alleviate back office work because people couldn't go to the office anymore, right? So it's kind of born out of necessity, and investment in those solutions has yielded some efficiencies there, but it hasn't solved for the forecasting and predictability problem, right? And interestingly, it hasn't really solved the visibility problem, which typically you would associate with technology solutions being efficiency and visibility, right? It sounds like there's still a bit of a shortcoming there.
Yeah, excellent. A couple of comments on the forecasting, and then Anthony, I don't know if you can see the questions. I think some of them came in from LinkedIn Live, and they're making their way into the chat box. I think Brian's copying them over. And just by way of notification, those who joined by LinkedIn Live, welcome. Thanks for joining through that channel. We started doing that about 6-9 months ago. Very interesting. The rest, the majority of people are coming through on the Zoom webinar. So there's some questions there. I don't know if you want to take those in a moment, but to the pain point on forecasting, seeing it move from 13% to 39% in a few years, we see forecasting show up. It's seemingly everywhere. Certainly in the treasury space, for the past 8 or 10 years, that's a key area. It's a focus, an area where companies spend and treasury groups spend most of their time. We're seeing this emerge on the payable side and the receivable side, like here, this tripling. And I think your points were very good to explain why, right? This, rates are getting higher, complete availability of cash and credit is declining. So there's a number of factors that are driving this, and they would spend more time. And we can look at technology results as well. People are using AI and machine learning when it's available through systems to do forecasting. So forecasting is such a big issue across all areas of finance. It's really, really, really dramatic. On the AR side, we saw this peak when we had in the spring of 2020 with COVID-19. The concerns shot really, really high, and then they moderated as payments still kept coming in. But a lot of items there. Any other thoughts on what I just said, Anthony? Or
well, I think the other issue with forecasting is really hard, right?
Yeah.
So
especially about the future.
Right, exactly. If we could tell the future, we'd all be retired. But I think that's part of the issue, right? Is it's really difficult to solve that, and so it stays an issue, if that makes sense, right? Whereas earlier we were talking about connecting to customer portals was an issue. Now it's less of an issue, right? Because markets kind of solved it, right? Forecasting sounds like something that's still, hasn't been solved.
Okay. A couple housekeeping items that I've been reminded of here. We have credits, CTP credits, some of the other credits that are offered, CP, Those are only available through the Zoom webinar platform, not LinkedIn Live, due to the requirements placed on by those that have those professional designations. So just a heads up. I think probably everybody knows that, but that's just a reminder. And Brian, if you would go ahead and post the link to the LinkedIn group for CTP credits so that people can connect there. That's another way of getting some notification on being part of that group. That's a group that we're growing. Look how fast that was. That was awesome. Brian's doing it. So we're all good on the polls. And yeah, excellent. So let's go to the bank services for clients slide here, which is we just showed you several data points that showed forecasting is more important for AR. It's more important for AR. And we looked at some numbers and saw, a poll from those who are on this webinar, 52% saw this as one of their top 3 pain points. Here we see a decline, but I also want to put this in some context too. So we don't see this decline of importance on forecasting anywhere else. But from a banker perspective, bankers saying forecasting services are decreasing in importance. They've dropped 20 points over this 4-year span or 3-year span across 4 different surveys. So it comes down to 57%, which is still higher than the 52%, which was the peak pain point identification on today's poll. But I guess my question or query to you, Anthony, is that banks serve a lot of customers. So because it's important to so many customers, this seems like it's moving in the wrong direction from what corporations and companies need. Your thoughts here?
Yeah, it's interesting. It's almost the exact same decline that we saw on the software one, or the leveraging banks for receivables system, about 20%. And I think this maybe is more of a reflection of banks focusing on their core competencies from an offering standpoint, as opposed to their reaction to the demand in the market. And similarly, right, as the fintech tech space continues to emerge and grow and mature, they're coming with their own forecasting solutions, right? And so that would be kind of my read on it, right? It's just banks kind of getting out of that forecasting services business.
Yeah. So there's that question that came in from Steven from LinkedIn Live. Here's the question. Let me just read it. It may not be one that we can answer on a broad webinar, but it says, are there any banks who are successfully offering AR and cash application solutions or cash app solutions to their corporate clients? Right. So, here's a lockbox that, takes all kinds of payments in and applies them perhaps to outstanding receivables. And then qualifying, don't need to name financial institutions, rather examples of how and where you're seeing them successfully deliver AR solutions. And, Stephen, I know that, fintechs are doing this and delivering that through banks. So we're certainly see that where they have the receivables, they're using AI and other methods of matching and providing that pre-matched information. That seems to be done more through partnerships. What are you seeing without, like Stephen mentioned, not just naming names?
Yeah, I mean, I think it's, kind of similar to what I was saying before, is that as a third-party provider of AR and AP solutions,
sure.
Right? So we typically view that as something that software companies provide in partnership with banks. I'm sure there are banks that have solutions out there, whether they're homegrown or white labeled. I'm not sure.
Yeah, I always remember, I don't know if I always remember, but it was multiple decades ago when a bank in the northern Midwest offered a solution where they were taking the receivables file and doing the matching and then sending it back. And they were, from from my knowledge, the market was one of the first ones, and that was pretty revolutionary in terms of how that was done and what occurred. And that was with tech that was available a long time ago. It wasn't today's tech. There was no machine learning, no engines that supported that. So as we move forward through time today, it's quite good. Excellent. There's another question. Are these needs going away for banks because corporations are turning to fintechs, or don't think of banks as having forecasting solutions? So this is about the forecasting solution. We don't have survey data on this. I'm happy to jump in and answer as well if you don't want to take it, but I'll give you first crack at it.
That was my read on it, right? Is that this is a reflection of the market moving more towards organizations leveraging fintech, right? And therefore banks kind of moving out of offering these services. I mean, 57% is nothing to sneeze at, right? So 3 out of 5 still offer it, right? But it's just down from kind of 3 out of 4.
Yeah, the level of importance, right? So yeah, good stuff. Some other questions about, interesting to note the forecasting percentage in 2018 and 2019. Did it increase prioritization for banks? I don't know, but it certainly increased attention. We did we formed the Treasury Coalition when COVID hit, and we were surveying everybody, the market weekly, then bi-weekly, then monthly, and then less frequently, to see the concerns. And that was really fascinating to see concerns shoot through the roof and then moderate over time. And Gordon put a good comment in there about the difference between forecasting receivables, receivable solution, and the operation of posting and applying receivables to accounts. There's a lot of nuances there. So good comments. Anthony, anything else on bank services for clients generally? We're good.
Nope, I'm good.
Okay. All right. So as we move to the takeaways, I do want to point before we cover these items. Anthony, if you'll cover the first 2, I'll cover the last 2 as we had pre-decided ahead of time. Brian, if you would pop up a couple of those things, the link for the report in the chat box, just to make sure everybody can download that. Same thing with the CTP list. If you would join that group as well, that would be most helpful to us, but also I think to you, especially if you're a CTP, or you have CPE credits you need. We're trying to share that information regularly. So thank you for your attention there. But yeah, so what do we need to take back to the office? What should you be thinking about? So we'll talk through what Anthony and I think makes sense from this data information and our view of the market.
Yeah, I mean, I think going back to the beginning of the webinar, B2B commerce complexity is increasing, on both sides of the AP/AR boundary. So knowing that as kind of a given, right? That then it's about planning for it and creating ways to manage it, right? Streamline it, and understanding that complexity is not going away. And ultimately, looking at where are the gaps in your process. I think with some of the key themes from a pain point standpoint was visibility, scalability, predictability, right? So when you're looking at how do you optimize your internal processes, how do you optimize your internal organizational structure, as organizations grow, defining roles, who does what and how. Right, it's a people process, and then the technology piece comes in later, as far as identifying solutions that are truly going to solve the issues that you face and the priorities that you have.
Yeah, as we look at fraud or security, fraud concerns are not going away. Not only that, that's an understatement. The criminals are more well funded. They're finding other weaknesses, exploiting them, even as we close things up. And so vigilance, tech services, all of these can help protect the inbound side as well as the outbound side of it. It requires this constant vigilance, not like we've got this knocked out and we can rest. It's the enemy, the criminals are constantly trying to find new weaknesses, new areas to exploit, corporates' defenses. And so, when we can layer in technology or services, it makes sense. Finally, here is do not forget the human element to our defenses. Don't just upgrade your firewall and your antivirus, but make sure the human element, people are being trained on payments, on payment fraud, payment security, and that this is a regular occurring. It's not, I got updated and I'm set for life. It's how do I do that on a regular basis? This is vital and essential. On the view, this is again to the visibility. Who really needs better visibility internally? What do they need to see? Making that data available matters. Jeff Bezos, from Amazon, said something along the lines of, if anybody has data in any area or department, it doesn't make it available to the company to, he didn't say exploit, but really to leverage and use as a powerful tool to help them run their business better. I think he indicated that they would be fired. Like, housing and making data secret is not a winning solution. And that's not a winning solution in our individual organizations. But really, what's the view? What do our partners need to know? What do they need to see? If we have a clean process on the outbound side or on the inbound side, we can make the issues and the pain of the other party lower, which will in turn make it more efficient, which will involve our staff at a lower level, a decreased level, and it matters. So add the data, add the visibility needs to your list of what you're trying to accomplish. Now, I also would ask that if you look in the chat box, Brian will put up the CTM file website, ctmfile.com, as well as the Corcentric site. ctmfile.com is a media site, and there's a way to subscribe to the newsletter. We'd really encourage you to do that at ctmfile.com. CTM stands for cash and treasury management. Corcentric is a provider of all kinds of services, particularly in the AR space, and really appreciate your underwriting this year's research, Anthony, your team. This is great, and there's certainly more information you can find on at corcentric.com and from some of the links that you see up here. So we'd love for you to connect in these different ways to the different assets that we have. Thank you so much, Anthony. And I think if you had any final comments, shout them out as we turn things back over to Brian for just a few more important PSAs.
Yep. Thank you, Craig. It was a pleasure. This was fun. Appreciate it.
Yeah, thank you. And Brian, we'll bring you back online.
Thank you, Craig. Thank you, Anthony. And thank you, everyone, for joining us today. The CTP credits, today's webinar slides, and the recording of today's webinar will be sent to you within 5 business days. And for more in-depth analysis of the 2023 Modernizing AR Processing Survey, be sure to download the survey report by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.